Options Model Portfolio Manager here at TGO. And wow, what an absolute bloodbath yesterday. And our bloodbath, of course, comes from across the Pacific. Then we implode. What do? We send that wave right back over to Asia. Last night, Asia stocks just had another implosion with the Nikkei down 4%. The Nikkei's down about 15% year to date, which is well past, hey, we're officially in a bear market. So very, very interesting because I'm getting ready to get on a primary live trade brief here, and we're going to get bullish. We are absolutely going to get bullish on Japan because as Japan and China go, so go the United States. Of course, we're going to have hedges. We took off 2 hedges yesterday, a VIX bullish double vertical for about 5, 6, and a SDS bullish double vertical. I think total of both trades were about $9,000. And I got bearish on volatility yesterday. I know you're sitting there going, Whiz, what are you, absolutely nuts? The VIX went up to 21 yesterday. Yeah, it did. And if you take a look at the chart and you're a Top Gun options trader, you know that when vol is cheap, you buy it. That's exactly what we did. When vol was cheap recently, we got long with a bullish double vertical. When vol is expensive, as you can see, you sell it. So look at this. Every time in the past year the VIX has gotten above 20, it may hang out there for a couple days or a little bit. It implodes and gets back down to where its resting heart rate. So I'm about ready to review the bearish double vertical that I got on volatility, and hopefully this is what we do. We get bullish on vol when it's cheap, and we get bearish. We roll inverted and do the exact opposite trade when we get bearish. And we had a great 2013 playing these trades and playing the VIX. And this is awesome. I love this target-rich environment, these triple-digit up days, these triple-digit down days. They are going to continue. Japan's going to continue to be all over the place. Especially with Abe and Kuroda, Bank of Japan Governor Kuroda, backing up the truck one more time, maybe with quantitative easing. Hey, we're going to get out of this quantitative easing. Maybe no, we're not. Maybe we're going to get back into it. Obviously, Europe's going to feel it. So it's just all around the world is kind of feeling it. However, I don't think... and I'm the perma bear, folks. You know me. This is what I've been waiting for, and the hedges in my portfolio are right on the money right now. My longs in my portfolios are obviously taking it on the chin right now, but you ready for this? That's why they're called longs. I have long call diagonals at the January 2015, January 2016. Who cares? I actually am great with the market short-term imploding because that means I can sell short-term front-month calls, upside calls, cheaper. Or the ones that I have on right now, I can buy them back. Here's what's really funny, though, is, and this proves that we're exiting Bizarro market, as I've said, is that earnings haven't been that bad. But for the past couple earnings seasons, they haven't been that bad. This earnings season kind of looks like every other earnings season. The difference? The Fed's leaving. So the fact that earnings season isn't that bad takes us back to before Bizarro market started and the government got involved in capitalism, where kind of good earnings day to day drives the market triple digit up or down, right? Or weak economic data. I think it was yesterday everybody's blaming our ISM number. Huge miss. 56.2 was a consensus. 57 was last time. 51.3. Of course the market's going to implode. As you can see, there's a little red fire-looking thing, and that means high impact expected. Tuesday, we're going to get some factory orders and an IBD, Investors Business Daily Report, yawn. Final services PMI, but tomorrow, the non-manufacturing PMI could be huge. So let's say this is good, and we had a 300-point down day on Monday about it. What if this is good? And we had good non-manufacturing PMI. Do we have a 300-point update? Maybe. Thursday, weekly non-farm payroll. We also get the ADP number. Who cares? It's usually off and completely wrong. And then Friday, obviously, the all-important jobs number. I got to tell you something, though. Yesterday afternoon, I got out of my VIX bullish double vertical for a nice profit when the VIX was about 20. And then it kept going higher. Never be the guy or gal that when you get out of a trade like that, you go, man, I could have made a little bit more money. Nobody rings a bell at the bottom of the market, and nobody rings a bell at the bottom. Nobody rang a bell and said, all right, VIX, stop going up here, folks, because look at the futures right now. Futures are up. Guarantee you the VIX goes down here, and I guarantee you that trade starts making money. The analogy that I use with my TGO traders with hedges is going to the airport. I'd rather be 5 minutes early for my flight than a minute late. You're a minute late unless you're, well, it doesn't matter if you're a movie star. They're not pulling the jet back to the jet bridge. Once that jet clocks out, it's gone. I don't care who you are, okay? So know that. So know that it's better to be early to get out of hedges than 1 second late, because the VIX, as we saw yesterday, it can move 5, 10, 15, 20% in the blink of an eye. In the matter of an hour, the VIX can be up 20%. A couple minutes, it could do it, right? It does the same thing to the downside, okay? So I'm going to talk about that here in a little bit in my live trading session here, 0900 on Tuesday morning. We do our primary live trade brief. Folks, if you're not having a blast trading this market, I'm telling you, you're doing it wrong. We are having a lot of fun here. Like I said, throughout my model portfolios with my various hedges on, we have made over $18,000 in the past couple weeks as the market's imploded. Now, yeah, obviously some of our longs have taken a hit, but as I said, that's not the point. I really don't care. I'm on the USS Top Gun options, and we're sailing full speed ahead. Sir, we just took a couple torpedoes to the side. I don't care. We have some awesome bilge pumps that completely knocked the water out of the ship. Not only knocked the water out of the ship, it made us faster and made us money. Okay? If you're not doing that, you're not doing it right. You have got to give us a call here at Top Gun Options. We're getting ready to gear up for our Options Weapons School launch coming up over the next couple weeks. Perfect time for you to get on board and start trading options. Now is the best time to be trading options when volatility is this crazy. All right, so I got to run, got to prepare. Happy hunting. Make sure you hedge. Have a great Tuesday, and I'll be back tomorrow with Wednesday's Market Sit Rep. We'll see you.